Hello everyone, I'm Helen Dalley. Welcome to Commonwealth Bank's CEO Customer Forum. Before we begin, particularly as it's NAIDOC week, I'd like to acknowledge the traditional owners of the lands on which we're meeting today. I'm coming to you from Sydney and I acknowledge the Gadigal people of the Eora Nation and pay my respects to elders past, present and emerging. Thank you so much for joining us. For the past 3 years, Matt Comyn, Commonwealth Bank CEO, has written to customers to give them an update about the actions the bank has taken to support customers and our communities through the year. He's also held public customer forums for customers to have the opportunity to speak directly with the CEO and the leadership of the bank and talk about what's on their minds. Now, while an in-person forum wasn't an option at this time, unfortunately, Matt and the leadership team still wanted to give customers a way to ask questions and give feedback to them. That's what this virtual forum is about. More than 2,000 customers have registered to watch the forum and over 1,300 questions, comments, complaints and other feedback was submitted. Now, we can't possibly get to all your questions in this forum, but most of them fell into some major themes or issues that are of concern to you. So we're going to get through as many as possible and I'll pose your questions to Matt so you can hear what he has to say. So let's get started. Matt, welcome.
Thanks very much, Helen.
Great to be here, even in a virtual form.
Likewise, thanks very much.
Matt, do you want to start with some comments that you might like to make?
Yeah, I'll keep them very brief because, as you said, there's a lot of questions to get through this evening. But again, I just want to thank our customers in particular for the opportunity to engage directly with them and particularly to all those customers who took the time to write in, as you said, with either questions or comments or inquiries. And I'm very much in your hands about which of those questions we go to. But we very much do appreciate the feedback. The team's worked very hard to respond, particularly to individual customer issues. And secondly, I just want to acknowledge what a difficult year it's been for our customers and for Australia more broadly. You see, from bushfires earlier this year throughout the pandemic, we've certainly worked hard to try and put as much support as possible in place during that time. And I also want to particularly thank all of those customers we've worked through a very significant effort together through the repayment deferrals, particularly over the last few months. And I think the way that our customers have really worked closely with us has enabled us to put substantial support in place this year and to give many of those customers peace of mind well into 2021. So we've certainly been working hard to make sure we're providing support to our customers and want to be a real leader in Australia's economic recovery and transition over the next few years. And I look forward to the opportunity to speak with you and answer as many of those questions as we can get through this evening.
Well, let's get started because there are a number of questions. Matt, let's start with the broader, I guess, economic picture, even though people want to get very specific, so we will get to that. You've had your third quarter September quarter update today. You've had some information to give customers on your deferral program. But in general, we've had a question on this economic outlook from Tash. She said, what is CBA's biggest concern once all the stimulus stops post-March 2021?
Look, our biggest concern is just how all of the sequencing works next year. I think we've really benefited and we've seen the economy really benefit from very substantial fiscal stimulus in particular and the repayment deferrals throughout the course of this year. The economy has continued to perform, in fact, in exceeding our expectations. And as you said, that was something that I covered as part of our Q1 results today. There is still, of course, a lot of uncertainty going into calendar 2021. And as we look forward, we're obviously optimistic about the recent news insofar as the vaccine. I mean, Australia's health outcomes have been absolutely world-class. And I think that really bodes well, not only for the health outcomes, but it's become such an important part of the overall economic policy for Australia. But as we see some of the income support taper, and we've got some very significant federal measures that were outlined in the October budget, which is all about creating jobs, and that's now going to be followed by a number of different state budgets, how all of that works together. And I think in particular from our perspective, and I think the broader economy, we look very closely at the jobs market and unemployment. and to see unemployment come down, hopefully significantly during next calendar year, is probably the area of the economy we're watching most closely.
I wanted to ask you about that, but I'll get to, Vivian wanted to ask, as part of this economic outlook, if the Reserve Bank shift the cash rate to negative, what will CommBank do to sort of the term deposit rates, your long-term savings rates?
Yeah, so maybe the first part of that is, I think, and the Governor of the Reserve Bank has said this, and it's obviously a policy for the Reserve Bank. I think it's extremely unlikely that Australia goes to negative rates. I think there's a number of consequences that would flow from that. So we do think that that's extremely unlikely, but we'd never rule that out. And so from a banking perspective, we've certainly contemplated what sort of system changes would be required. As you'd appreciate, not all systems were necessarily built or designed with negative interest rates in mind. So we haven't completely ruled it out, but it would certainly put even more pressure on the banking systems, particularly around net interest margins. And I suspect it's one of the topics we're going to cover tonight. There has been a lot of downward pressure on deposit rates, and we've got about 7 million deposit customers, about 2 million home lending customers, to give you a sense of the broad ratio. And of course, as you'd appreciate, and I see and certainly understand how much impact that's having on a lot of our savers as the cash rate has come down quite substantial. I think we've had 6 rate cuts since the start of 2018, which is putting a lot of pressure on depositors.
All right, well, we'll get to that, but you're saying you think it's highly unlikely that the Reserve Bank will go to negative rates?
Yes.
Yeah, okay. Daniel wanted to ask you, what are your predictions for the property market? Because he's wondering, now that we have more clarity on the budget update and its impacts on the economy, but I think even since the budget, we've had more kind of signs about the property market. What's your take on it?
Yeah, look, absolutely. And given not just the size of our balance sheet and in home lending, but also just the importance of house prices to the Australian economy and I think broader sentiment. It's one of the areas that's really surprised us positively. If we went back to what we were, I guess, expecting and planning, a base case, we probably thought house prices in, let's say, May this year, we thought we'd probably from peak to trough would fall somewhere in the order of 10 to 12%. A few months ago, we upgraded our forecasts and thought that peak to trough might be something like 6%. As we've seen in the most recent numbers, we're seeing house prices are basically rising now in all markets. And so it's possible that peak to trough is only somewhere in the order of 3%. And I think with low interest rates and the Reserve Bank's recent decision where we're seeing borrowing rates, we actually think that there's likely to be an increase in house prices, certainly over the next 12 to 18 months. There's a number of other variables. So I think that's good overall for obviously individual customers, but more broadly consumer sentiment. And it's one area of the economy which has been remarkably robust given the pandemic that we've all been living through during the course of the year.
Yeah, I wanted to follow up. I think you mentioned in the answer to Tasha's question. What about your outlook for unemployment? Because the negative impact that could have on both, the post-COVID recovery and the economy more broadly, because in fact RBA Governor Lowe noted just last month, the highly uneven impact of unemployment, and he quoted figures with around 500,000 people under 35 losing their jobs in the early stages of the pandemic, and that around 300,000 still out of work in August. Where do you see unemployment next year?
Yeah, I mean, it's a really important question and topic, and that's why there's so much effort that's going in at a policy level to create jobs to reduce unemployment, not because of the financial impacts for individuals and families, but also some of the social impacts that would flow from sustained high levels of unemployment. And clearly during the course of the year, unemployment has risen quite sharply. That said, I think the Reserve Bank's forecast just a few months ago was looking for a peak somewhere in the order of 10%. It's not going to reach that. It's going to be closer to probably 7.5%, 8% this year. Our forecast is to see it reduced to 6.5% by the end of calendar 2021, or just over 12 months, which I think would be an extremely good outcome. It's, of course, where a lot of the policy levers are designed in the budget to really pick up and an element of that is making sure that businesses and consumers, there's significant or sufficient confidence for businesses to go out and invest, to borrow, to hire additional staff. Obviously, there's a number of policies around JobMaker, investment allowances, lots of incentives for businesses in particular, which are absolutely critical as part of the recovery to be able to have sufficient confidence to take advantage of those measures and to be able to create jobs as a result of that. And I think, lastly, as you said, Helen, what we've seen is parts of the economy very unevenly impacted. And that's one of the things that we've worked very closely with our customers to try and support customers who, 6 months ago, and completely outside of their control, I mean, their lives in many cases have been completely turned upside down. And with the support of the government and our regulators, we've been able to do that by very large numbers of repayment deferrals during the course of the year.
All right, well, let's get to that because we're talking about the sort of more macro picture. Commonwealth Bank and what you're doing. Now, we've had a number of questions from customers around COVID. Benny asks, the repayment deferral program was a great support to customers affected by coronavirus. Will CBA continue this program into 2021 or have other options to support customers? And he follows up with, can CBA consider to allow some of the fixed home loans before COVID-19 with high interest rates switch to a new low interest rate without penalty?
There's a couple of great questions. So, on repayment deferrals, the vast majority of repayment deferrals, customers entered in March and April, sort of late March and into April. So we've come through the 6 months, which was the initial 6-month period. For many customers, fortunately, as I said, the economy has really recovered very strongly. So the vast majority of customers are now gone back onto or resuming their repayments.
Which is amazing, really.
It is, and we've seen that both in our personal customer base and with businesses. But we've also had customers where we've extended repayment deferrals where that was the best solution for them, somewhere in the order of up to 4 months. There's been a number of other solutions that we've put in place for some customers, extending loan terms, moving to interest only. But I think we've been really pleased that so many customers are in a position to be able to resume repayments. As a consequence of that, and because we've been working so closely with customers, one of the choices and decisions we announced recently was just giving all of our owner-occupier customers confidence and peace of mind. They don't need to worry about, even if they're in repayment deferrals or they're having difficulty, they don't need to worry about any forced sale processes or losing their home. And we've given them that confidence going out until October 2021.
So sorry, Matt, this is the moratorium that you announced on foreclosures. Just exactly what does that mean? Because I think a lot of people perhaps don't really understand what it means.
Sure. So, one of the things that we observed, and we've done more than 300,000 calls across our personal and business customers over the last couple of months in particular, was that even where customers were either restarting their repayments or perhaps have gone on to a repayment deferral, I work in an industry which continues to be very significantly impacted, let's say in and around tourism or aviation. Even for those customers, I think they were worrying a lot about what might happen next year. And you have to remember, a lot of these customers have never been in a situation where they're behind in their repayments or they're in financial difficulty. And we felt that many customers were probably disproportionately but understandably worrying about what might happen and could I lose the family home. And so as part of that, when we thought about it ourselves, we worked with groups like Financial Counsellors Australia and said, well, why don't we give customers the confidence and certainty to align with what we were practically planning on doing anyway, which means that if you were making your repayments simply pre-COVID and even if you're in difficulty at the moment, we're basically giving a guarantee that going out to October 2021, we won't be commencing any forced sale or foreclosures. And so we talked about that in the last couple of weeks, really just, as I said, to give customers peace of mind so they can be focused on some of the most important things to them, which is, of course, shouldn't be worrying, hopefully, about something like that, getting their jobs and supporting their families during that time.
Michelle asks, and you may have partly answered this already, how are you helping or assisting customers who've successfully applied to have their payments deferred after the repayment deferral period? So how are you assisting them after the payment deferral period?
And so maybe there's one part of your last question which I didn't answer, which is if people are on higher fixed rates and they're moving on to a lower fixed rate. So I mean, it's important because there's the options as you come out of a repayment deferral. And of course, as I said, fortunately, some customers can commence those repayments in full because they're in a position to. Others, and that's where there's a spectrum of options, including repayment deferrals. But there's also, fortunately, many customers pre-COVID were ahead of their repayments, so you can extend the loan term. They might not be able to make the full repayment amount that they were making, but you can reduce that. Certainly, if there's a minimum amount, you can move them to interest only. And I think then, just to pick up your point on fixed rates, the difficulty about saying, and of course we would consider on a case-by-case basis, but there is a genuine cost to the bank of breaking a fixed rate. It's effectively a funding cost, or you can imagine when someone fixes a mortgage, we hedge that or fix that via the markets, and there's a real cost. So there's no margin that's earned by the bank in the breakage of that. But there certainly has been examples where we've worked directly with customers who are in difficulty and breaking out of a fixed rate. We can come to some form of arrangement which will help them because interest rates have fallen very sharply in recent times. And so, I mean, just last week we announced a 4-year 1.99 fixed rate. I mean, that's obviously a very low rate versus what would have been available in the market, say, 2 or 3 years ago.
Yeah. Now, just to sort of follow that up again, people like Benny in the second part of that first question who asked about could they move from fixed rate pre-COVID to the low interest rate without penalty. Can people already on a fixed rate loan move to this new?
It's hard without, it's called an early repayment adjustment, and it's largely breaking a fixed term contract. So, I mean, we certainly work through, and as I said, there's certainly no margin applied from the bank's perspective. But what we have seen is a big increase in the number of customers who are taking out fixed rate loans. We're seeing more than 40% of new loans going into fixed rates, which would be more than double what we would historically see, which makes perfect sense. We've got a target cash rate of 10 basis points in Australia, and the Reserve Bank governor's been quite clear that interest rates are going to be at that level for certainly a significant period of time, certainly several years. And I think it's unlikely that there's negative interest rates. So there's not a lot, really much further for the interest rate to fall. And so many customers are taking advantage of those record low borrowing rates.
Let's sort of move on to mortgage rates and lending rates because, Matt, this theme, I guess, around mortgage and lending rates really received a very large number of customer questions. We can't get to them all, but here are a few of the most typical questions that people really want answered from you. Hani says, why has the Commonwealth Bank on more than one occasion failed to pass on the RBA's interest rate cuts? And there's a follow-up to this as well.
Yeah, sure. And I think it's incumbent on us to explain the choices that we make. And so maybe the last couple of interest rate decisions that we've made, and the RBA, if you take the most recent one, made a reduction of 15 basis points to the target cash rate. Ultimately, we need to consider a number of different factors, including the cost of funds, but we make choices about where we want to transmit those reductions. So in this case, we chose, as I said, to reduce the fixed rates because what the RBA has also done, not just in reducing the cash rate, but also future expectations around interest rates, which is what's enabled us to offer such a low 4-year fixed rate. So it's a very significant reduction to fixed rates right across 1, 2, 3 and 4 years. And then in our business rates, we passed on 50 basis point reduction. So not the 15, as I said, 50 basis points to particularly secured and unsecured. We really want to support the business community. So we've got a $299 secured SME loan, $399 unsecured, extremely low borrowing rates. The rate decision before that, we decided to cut the business rates by 100 basis points. So a 25 basis point reduction, but we passed on 100 basis points. And at that time, we ran I think it was a 1.7% 9-month TD special for some customers. So I see we see the signal from the Reserve Bank. We take into account a range of different factors, and then we try to transmit and to support the parts of the economy which we think are most appropriate. And we recognise that those choices probably aid and help some customers more than others, particularly at the moment. I feel that acutely on behalf of our customers. For anyone who's got a borrowing rate of those sorts of interest rates, at record lows, whereas what we were talking about earlier, particularly I think for savers, some of our self-funded retirees who have previously held their money in term deposits. The term deposit rates have come down very significantly over the last couple of years.
We're going to come to that because that is an area of concern. But just the other part of what Hanny is asking you to explain is, in some cases the rate cut was partially passed on, but in other cases it was completely ignored.
Yeah, and so I think there's, as I said, maybe been 6 interest rate reductions over the last 2 years, maybe slightly just over 2 years, and we've made different decisions each time. Sometimes we've passed the standard variable rate on in full, other times we've passed less of it and run deposit specials, sometimes we've passed 4 times the reduction through to certain rates like business lending, this time much more around fixed rates because the RBA is what's otherwise referred to as quantitative easing. What it does is it lowers the term structure of interest rates, which is why we've got much more longer dated fixed rates. So I guess it's more nuanced in terms of the decisions and choices that we're making, and we consider a range of different factors and try to make the best set of decisions overall, which do vary based on each interest rate decision.
Heidi, Heidi has asked, why can't you match an interest rate from another bank with comparable terms when I have been a loyal customer for over 16 years?
Well, I think that's a great question and one that we've received in the past and think about a lot. I think we're very competitive at the moment. And banking is a very competitive market. If I look particularly, if we start with housing, we talk about any of the pricing, but housing we've got sub 2%. We'd be very close to, if not lowest in market, lower rates than many actually of the smaller institutions. I think it's probably manifests a little bit more at the moment in deposit pricing. And so I think there has been recent changes in pricing. I certainly accept that there would be some particularly smaller or fintech institutions that are currently offering a higher savings rate. It's obviously up to them about how viable that is over the medium term, but certainly we really value our customers and their loyalty and tenure with us, and we're very conscious of trying to make sure that we're always competitive right across the spectrum, and then of course supplement that hopefully with great service and great digital and technology, and something that we're absolutely conscious of.
This is a question from one of your regional or rural customers. Brian asks, my wife and I are farmers. We've banked solely with the Commonwealth for over 40 years. In the time we've been with CBA, not once have we had to ask for anything, and we have made every payment on time every time. We recently wanted to expand our flock and sought finance to do this with security of 2 farms in a sought-after location. You would think we were rock solid based on performance history. Yet we were knocked back for finance because now a computer model says no. I've banked on a handshake for 40 years and had a strong relationship with previous bankers, says Brian. We know our business and we have history to back it. What is the future for your modelling and transparency if you can't sit around a table and work through the issues with a customer?
Well, as you appreciate, Helen, that's a really good example of one where we would like to follow up directly with Brian. And look, there's some elements of the business model with banking that I don't think change, and I'm fortunate to have spent time with many of our regional customers, and absolutely it's a relationship business, so it's not, we're certainly not looking to depersonalise that at all. We're very supportive of the agricultural sector in Australia. I think it's an incredibly important part of the economy. I think both now and into the future. As we talked about earlier, we had our Q1 results announced today. We're growing at more than twice the rate of the system or market. One of the reasons for that is agriculture. We've certainly increased our lending and exposure. So would need to work through the details of Brian's individual circumstances. But I mean, I guess our overall posture and certainly risk appetite and view towards agriculture is very supportive over the short, medium and long term. And I mean, it's been a joy to see some parts of the country certainly getting high levels of rainfall, and many farmers and parts of regional Australia who've had a very difficult few years are having a much better year. So that's certainly an area that we would absolutely want to follow up on.
Okay, well, I'm going to range around. This is really about customer loyalty, but we're going to get to the deposit rates in some of these questions as well. And this area of customer loyalty really has come up with a number of questions from your customers about rewarding existing customers. And it is something the Hayne Royal Commission also, looked at and sort of drew attention to. Now, Lon asks, I've heard that if people moving their home loans across to CBA, they will receive incentive payments of $2,000 and have the same interest rates as CBA's current customers on Wealth Package. Are there any incentives or discounts on offer for CBA loyal customers? If not, why not?
No, it's a great question, as you said, Helen, and it's a question I think that's surfaced a few times. And maybe I'll talk specifically about home lending in a moment, but it's the broader point where we want to, and we feel like there's still more to do around rewarding loyalty through a variety of different ways, both from a rate, a fee, I think a service proposition. We have a rewards and loyalty program, particularly that we've built into sort of offers within our mobile banking app. That's an area that we want to develop further. And I think in this particular example, it's a really good one. We were the last to enter the cashback, which is a feature of a very competitive market, and some banks began offering cashbacks for customers who would refinance their loans. We have the lowest cashback offer in market, and it's something I guess we matched, albeit at a lower rate, somewhat reluctantly. And secondly, I guess the other part of that would be... So
this is to gain new customers, and you've been reluctant, are you saying?
Well, insofar as, because I understand the question around for existing customers, well, what's in that for me if you're going to be chasing new customers?
Clearly.
Exactly. And look, that happens in many industries. And if you're with any company but you see an offer that you think is better for new customers, it's completely understandable that would be frustrating. I mean, we've been fortunate in home lending. We've grown well above system over the last couple of years, but because it's such a competitive market, people are competing hard for new customers. But it's not to say that there aren't rates and better rates available for existing loyal customers, or in this case, borrowers. And a lot of what we've tried to do over the last few years in particular is try to get more of that sort of proactive pricing offers in place for our customers to reflect the fact that it is a very competitive market, and we don't want too much of a gap between an existing customer versus what might be available to a new customer.
Well, John asks a similar question, but I'll still put it to you. With interest on savings accounts at all-time lows, I get very frustrated, says John, that long-term CBA customers in most cases cannot get the same bonus rates as a new customer. When will this change? CBA needs to reward long-term loyal customers, says John. Yeah,
and look, I agree with the thrust of that question. I think going back a few years, there were more products where there was what's known as an introductory rate. Yeah. For us, there's only one product that still has an introductory rate, and the introductory rate versus the existing rate is compressing, which I think is important. And you can imagine in a higher interest rate environment, that introductory rate across the market was high. And so we've had this question for a while. So what we've tried to do is really compress that insofar as it's not a big difference between the existing customers versus new customers, and rationalise it across different products and product constructs. And look, there's another product that we offer which is more aligned to regular deposits and savings behaviour. That's what links to a higher rate, which I think is, in many customers' circumstances, preferable, and I think perfectly understandable that they'd rather see a rate that was tied to their tenure and also their behaviour versus just being either new or opening a new account with us. And I guess the direction of that overall, I tend to agree with.
Matt, this is really a theme that came from a lot of retirees, but it is about some of the same issues. But they're important questions. Janice asks, why should investors continue to invest their money in term deposits, save their money in term deposits, with such small return? The bank needs investors or savers to continue your lending operations in the housing market. There seems to be an imbalance here as the term deposit holders are facing many hardships as a consequence.
Yeah, look, Helen, I absolutely agree with that question. It's not an easy, there isn't an easy answer, unfortunately, because as interest rates have come down domestically, but also globally, the rates that are on offer for customers that are available are low, and there's no escaping that. And part of the reason...
Is there no escaping it?
Well, there is, and I can give you a practical example. At the moment, there's a lot of savings that have increased within Australia. When the RBA cut the cash rate to 10 basis points, one of the features was also removing or reducing the exchange settlement account to zero. Which is perfectly understandable. We've got about $12 billion of deposits at the Reserve Bank earning zero. It costs 10 basis points for us to borrow. So it's just not economic for a savings rate or a term deposit rate that is, unfortunately, significantly above some of the rates that are being offered today. And I've noted the Reserve Bank Governor's comments in this particular area. I think there's a couple of features of a low interest rate environment. One is it's very hard on depositors and savers because interest rates have come down. Two, which again goes to that question, that there can be the chance or the opportunity customers will seek then perhaps to allocate their dollars into riskier assets to try and deliver a better return, which of course is something that we and others need to watch very closely. But unfortunately, as rates come down, the positive consequence of that is borrowing rates are coming down substantially. But the negative consequence of that sort of rate gravity is that deposit rates have come down as well.
And I guess that obviously impacts people who are partly or wholly dependent on those deposit rates' interest, or they had been for their income. Maria she's a self-funded retiree, and I've been a customer of CBA for almost 3 decades. What will CBA do to help long-term customers like myself with the bank deposit interest rate reduced to almost zero? So I know I'm asking you several questions along the same theme, but you can see there's a deal of concern, there's some passion in there and maybe a little bit of anger about at their stage in life, they're not necessarily borrowing for a mortgage, so they're really dependent on the savings rates.
No, and look, I understand.
And maybe, sorry, you are pushing them into more risky investments that they perhaps don't want to do as a retiree.
Yeah, and I perfectly understand that. And unfortunately, that's a consequence of the interest rate environment that we're in, which doesn't make that answer any better or easier. But I think at a policy level, as I said, one of the consequences, the negative consequences are to deposit rates, and there's the possibility or risk that people try to put their investments into higher risk investments. I think, and appropriately, I have to say, I think all of the policy levers at both the fiscal and monetary policy perspective are directed towards creating employment. And it's absolutely really hard on self-funded retirees, and I see that from both our depositors, as you and I are discussing, but also I hear it directly from shareholders as well, because the other side of that, the coin with self-funded retirees, and we're fortunate to have about 890,000 retail shareholders and families who own us directly, of course millions more through superannuation. And as dividends have been reduced across the banking sector, but across the broader market, it's been the double effect of both those lower rates that are on offer for deposits as well as lower dividends. And the big four banks themselves last calendar year contributed about 32% of overall dividends, and they've come down quite substantially this year. So we certainly recognise that, and I guess from some of those, many of our customers are also shareholders, and so we're very cognizant and understand how important the dividend is to them as well.
Keith asks, and it is a little bit about this same theme that I've been asking, many retirees and pensioners rely heavily on receiving interest on their term deposits and their net bank saver accounts to supplement their income. What can be done to provide a decent rate of return to these people who've worked hard, saved hard all their working lives and now find that the interest on their deposits doesn't even cover inflation? Net saver is about 0.1% that you receive, and term deposits, I think, are about 0.35% for 6 months on up to 50 grand and 0.65 for 12 months. I mean, it's nowhere near the inflation rate, is it?
No, it's not. I mean, I think the 6-month term deposit rate's a bit higher than that at the moment, and I think the 12-month would be as well. But the thrust of the question is right. Rates are low, and the only way that's really going to turn around is if interest rates or the target cash rate starts increasing, which frankly is very unlikely in the next few years. And I think from a monetary policy perspective, what we'd need is an improvement, obviously, in unemployment. We'd need a pickup in inflation, and the Reserve Bank's made it clear that they'll be looking for actual inflation to be in the target 2 to 3% band. And then that would see the cash rate over time, which is certainly, as I said, unfortunately for the customers we're talking about, at least a few years away before you could reasonably expect that deposit rates will be going up.
Yeah. And of course, can you just explain if there is any relationship between, you gave the other explanations to why these deposit rates can't go up. Does it have an impact on your profitability? And of course your customers want your bank to be strong, but is there a way you could take a little bit of profit to give to deposit rates?
Yeah, and look, we do. For example, the term deposit that I mentioned earlier, the 1.7, I think it was, that we ran for 9 months, the 9-month term deposit that we launched in March, every dollar that went into that deposit we lost money on. That's a negative margin to us. Some of the deposit products, even the ones that would seem to be a very low rate, would be negative margins based on the downward pressure, not only on what has happened with the cash rate, but also sort of future expectations, or what's referred to as the yield curve. As you alluded to earlier, we had our first quarter results today. Our profit was down 16% on the prior corresponding period. So clearly it's a very difficult time for financial institutions, which doesn't mean, of course, we're not trying to strike that balance the whole time between providing support to customers, facilitating financial stability and economic growth. And we feel those challenges very acutely. And as we've seen in other markets where rates have been low for longer, parts of Europe in particular, it puts enormous pressure on financial institutions, and the customer outcomes that we've been talking about in terms of low rates, unfortunately, are a very common feature of many markets at the moment.
I'm going to move on because another big area that is still an issue for many of your customers is branch closures. And it's an area of concern and annoyance to a great many customers. Here are a couple of questions that are illustrative of the sort of questions that people want answered from you. Narissa writes, how will the CBA better support rural customers? I live 20 kilometres south of Cairns in Queensland. The only ATM in my town has been removed. The next closest CBA branch has been temporarily closed because of COVID-19 lockdown. This means making cash deposits is difficult for my business. I also work on Saturdays, which makes accessing the closest branch that is currently open but 20 kilometres away very difficult.
So look, overall, I'd say we have the largest branch network in Australia. We've got about 920 branches. We closed temporarily about 115 of those for a couple of reasons during COVID. One, clearly the number of people that were coming into branches was substantially down, but also we redirected about 500 of our team into our financial assistance solutions to be able to support customers going on and out of repayment deferrals, which in aggregate I think's worked very well. But I certainly understand the inconvenience for someone who was used to going to a particular branch if it was temporarily closed. The other thing I would add is we, of course, have an arrangement with Australia Post. They have about 3,500 outlets where you can do your banking around Australia. From an ATM perspective...
So, sorry, just tell us a bit more about that. So it sounds like Nerissa has a business, she needs to deposit. Well, there's probably not that much cash around at the moment, but would the Australia Post, does it suit small business?
It does. They certainly set themselves up that way, which, so I suspect, given there's about 3,500, as I said, outlets around the country, there'd be one that would be reasonably close. And I think the other element of the question as well was around ATMs.
Yeah.
And so, again, we have the largest ATM fleet, which I think is approximately 3,000 ATMs nationally, but also in 2017, we led the change to not charge customers for access, non-customers for access to our ATM. So you can use effectively an ATM at any of the major banks and it's free. So I think there's probably, hopefully, a combination of solutions that might be appropriate in that particular circumstance. But I mean, we have seen, and I think we'll continue to see this post-COVID, quite a marked change in the way that customers are transacting with us, particularly with cash. I mean, obviously, cash usage, I think, across the economy must be down somewhere in the order of at least 20%. And so we need to obviously support a range of different models to best support our customers.
I'm going to sort of combine two questions from two customers here. Helen asks, what plans are you putting in place to continue supporting elderly clients? i.e., are you planning to close more branches? If so, how are you making decisions to close those branches? Is it purely on population, or how are you doing that decision making? How are you planning to inform people who normally bank at those branches that they will be closed? And then the second aspect is Beverly asking, how do older people unable to drive, unable or unwilling to use computers and net banking, and when both ATMs and branches are closing in particular shopping centres or little towns, how are you helping those people?
So, I mean, similar to the answer from the previous question, obviously a range of factors, and it's important from our perspective to maintain the largest branch network in Australia. But as I said, over time, that has reduced. Now, during COVID, clearly that was quite a large number of branches which we temporarily closed, as I said. I'd say branch volumes or number of transactions were down more than 50%, and would still be, even today as the economy is start to open back up, still well down on the pre-COVID levels. But ultimately, each of the decisions around, do we retain the branch in the existing location? Do we change the location? Because sometimes it depends on where the population is growing, moving from one shopping centre. So a range of different factors. We try to be as transparent as we can be if we're going to make a change, whether it's a change in location or a closure of that branch, to engage in the local community and of course with our customers. And then the factors that we take into account are all of those that I've been discussing, but also what are the available alternatives? Is there another CBA branch that's nearby? How close is the nearest Australia Post? What other ATMs and other banking services are available? And I think particularly as you were asking about elderly customers, and that was a real challenge during COVID, because we certainly recognise that, understandably, many people didn't feel comfortable leaving their home and weren't used to banking with us digitally. So, look, we electronically, we sent out key cards to about 130,000 customers who'd never used a key card. We're used to using passbooks. I think the last count I saw, about 40,000 or so of those had started using them. We've run more than 1,000 training and education sessions in branch to try to get people comfortable and familiar with internet or online banking. And so I guess through a variety of different means, we're trying to support customers as best we can. And during that period, we've had a very sort of targeted focus in particular on some of our elderly customers, given, I'm sure, just like they're banking remotely, they're probably ordering their groceries remotely. I mean, a number of people's behaviour did change given the health risks.
I'm going to move on to corporate responsibility, climate change. Carolyn asks, according to Market Forces, since 2016, Commonwealth Bank has loaned more money to the fossil fuel industry than any other bank in Australia. Could you please explain your position on climate change?
Yeah, look, I mean, we see climate change as a very important issue. We're committed to Paris and to net zero by 2050. There's quite a lot of disclosure in our annual report, which sets out what we call our energy value chain or exposures to different sectors. And you'll see, particularly across fossil fuels, you'll see our exposure has been reducing over several years. In particular, with policy in and around coal, which tends to be a very topical issue. I think importantly, we certainly see that there is a transition that's underway, but we also want to support some of the opportunities in the economy as energy is a big focus at both the federal and state level. And so we do see both, importantly, some significant opportunities for Australia and for our customers. And we want to facilitate and be a leader, as I said, in that economic transition.
Sibyl asks you, I applaud CBA for its 2019 policy to reduce its thermal coal mining and coal-fired power generation exposures and to limit your banking and financing activity in new oil, gas or metallurgical coal mining to projects which are in line with the goals of the Paris Agreement. However, I note that other banks have much more radical policies in this area. What is CBA doing to move more quickly to become a truly carbon neutral bank? And what pressure are you putting on the Business Council?
Well, I mean, perhaps I think I won't sort of go into the Business Council. We're part of that, but clearly they've got a broad range of members. From our perspective, as you'd expect of the largest bank in Australia, this is an important area. We also recognise that certainly not all views are aligned in Australia about particularly the speed of the transition. But as I said, we've signed up and believe in the Paris agreements and net zero by 2050, and therefore you have to have an understanding about what the trajectory needs to be in terms of emissions. We have what we call our ESG, or think about a very robust lending process to make sure that if we are lending to some of those sectors that we talked about, that it's consistent with that. Of course, that requires judgment over a range of different factors, and we increase the level of both modelling as well as disclosure and transparency, particularly on a year-on-year basis. There's a lot of work that we're doing in that particular area at the moment, but we also want to work closely with our customers. We don't want our existing customers in agriculture, as we were talking about earlier, an important part of that. So we're certainly looking to engage with our customers. And I think there's, as I said, a lot of opportunities to really support some parts of the economy, which I think will be a good opportunity. Hydrogen as a part of broader renewable strategy, I think is part of that. You're starting to see some of that in the state budget. I saw that in the South Australian budget. I was in South Australia last week. I saw the Premier there. I saw the New South Wales Premier this morning. Was talking about the New South Wales budget's going to have some specific initiatives there as well. So we certainly recognise the importance of the issue and facilitating investment in the technology roadmap that the federal government's outlined. We've got a clear role to play, and we intend to do that.
There seems to be in both those questions a little bit of implied criticism that you're lending more, the first questioner said, to the fossil fuel industry than any other bank in Australia. The second one, that other banks have more radical policies in terms of lending to either renewables or to existing types of energy. Do you take that criticism?
I'm not. I mean, I'm quite familiar with their policies. I've seen some international banks' policies as well, and so certainly there's some different approaches, and one may argue radical, particularly offshore. But I think we're very conscious of, from our perspective, making sure that we're acting in Australia's best interest, and that's going to be very closely aligned then with the Commonwealth Bank's interests. I think some customers, of course, may like us to be moving more quickly. Others perhaps slower in some of these areas. So I think it's really important to understand and recognise the criticism, Helen. There are a number of people that we would meet with during the course of the year, not just investors, but some of the groups that have a direct interest. And typically at our AGM, we get a number of questions in this particular area, and it's a topic of regular discussion at both the board and between myself and the chair of CBA.
I want to bring it back to some of the specific issues that are still concerning some of your customers around this theme is really around financial assistance. And of course, this year it has been a bit different, and there's a lot more that CBA is doing that, you know, may or may not have got out to the your customers to their knowledge. Adam asks, it's wonderful that you've offered to help businesses and homeowners, but I have both a credit card and a personal loan with you, and there has been no support or assistance to me or similar people. Do you propose any assistance to us who don't have a home or a business, or are we just easy to claim bad debts?
Well, certainly not the latter. I mean, for personal loans and credit cards, we offered a 2-month repayment deferral. So not the 6 months of a home loan, but the risk profile, but also the way our customers use a personal loan and credit card quite different to a home loan. There's been other things that we've put in place, particularly for customers, and we've seen overall credit card balances reduced by in the order of 20% over the course of the 6 months. And we've seen that actually, interestingly, internationally as well. We've also had targeted offers directly to customers if they had large and outstanding or persistent balances to put them on what we call a sure pay, or to think of it like an instalment, so a much lower cost, but like a reducing or principal and interest reduction. So look, we're certainly conscious and cognizant of all of our customers. We don't want them to feel left out. We have, of course, target a lot of our support at home lending, given just the size of our customer base and business lending. But we have of course tried to support and help as many customers as possible in our personal lending and credit cards. And I guess, look, I'd encourage I'm sure we are following up, and I'll make sure we are, but also to get in touch with us directly for customers that are experiencing financial difficulty. And that's what I think's worked extremely well from our perspective. We've seen something like 4 times the normal contact rates when we're trying to get in touch with customers. And it helps us, and I very firmly believe it really helps customers to talk closely with us.
I wanted to ask, there were a number of questions from women in particular. Mandy asks, I've read all the wonderful things that CBA has contributed during COVID, but I am a single mother of 6 children, a domestic violence victim, and have been unemployed since March. Since then, I've had over $500 of fees taken out of my account, I presume your CBA account. When I attempted to call, I was put on hold, then hung up on. I thought we were going to be looked after, says Mandy.
Yeah, look, I'm sorry to hear that story and example, and that's something we definitely will be following up with. I mean, there's definitely options around fee-free banking, particularly for customers that are experiencing difficulty. It's a little hard for me to understand whether that's the nature of whether maybe that perhaps the account's being overdrawn, but it doesn't sound like we've got the best banking solution in place for that particular customer.
Mandy, just quickly, how would she write that? Does she have to, is there any way she can go online? Does she, because, you know, I notice you've got Next Chapter, which is something that came in with COVID, and that is meant to assist, but is that something that she can access easily, or does she need to ring up the call centre? She obviously got frustrated with one call.
Right. Well, I mean, without wanting to delve into her circumstances, I mean, particularly around financial abuse and domestic violence is an area that we've really put a lot of time into over the last few years. We've invested more than $30 million. That was pre-Next Chapter. Next Chapter is something that we've put in place.
What is that briefly?
Well, it's really about providing better support,
right,
and helping achieve independence for customers who are suffering financial abuse and domestic violence. And part of that's also just having expert counselling and support services that are available. It's also about providing things like no interest loan services. We partner with a group called Good Shepherd to be able to do that. So certainly if that's her set of circumstances, then we can certainly help on that side. But even for any customer, even without that set of circumstances, who is in real difficulty, then there's certainly arrangements that we can put in place, and we can contact them.
A sort of an associated issue is Shirley writes that as a woman who's now 60, I'm unable to secure a home loan to help get my own home to retire in. I do see CBA as the Bank of Australia, but what are you doing for women like me who are potentially the homeless of the future? Asks Shirley.
Well, again, I have to go through Shirley's circumstances. I mean, look, as I said earlier, we, from a lending perspective, we're growing at more than 2 times system. Even in the last quarter, we've lent more than $30 billion. And of course, we want to help as many customers as we can. There are also circumstances where we may not be able to. We might think it's not necessarily in the customer's interest to take out loan. Now, I understand that, of course, everyone wants to have an appropriate situation for themselves to live in, but sometimes lending people money isn't the best answer. But again, we need to work through those particular circumstances. And it's one of the difficulties in a tougher economic cycle is trying to support customers as best we can, but realistically, given the challenges, we won't necessarily be able to help every customer in exactly the way that they would like.
All right, let's move to credit cards. Deborah writes, I would love to have all my banking with CBA, but my current credit card with someone else has no annual fees and their interest rate is quite low. Your credit cards don't come close to this. Anytime soon, might this be changing?
Well, again, I'm not exactly sure what the competitor product is in this case. Look, there's a lot of, I think there's about 250 different types of credit card available in Australia. We certainly have a no-fee card, a low rate card, an instalment product associated with that. So I think,
So it's possible
we'd certainly...
somebody might have the wrong sort of credit card for them, but you're saying there's a CommBank product.
There's a number of different options. We'd certainly, like the opportunity to understand that customer's circumstances, but also recognise that it's a competitive marketplace, and we've got to make sure we've got good products on offer for all our customers.
I'm conscious of our time and I want to move on to as many questions as I can possibly get through of your customers and what they want to know. Around the broad theme of small business, Lauren has asked, supporting local businesses is vital at the moment. How will you be supporting new business owners and new business loans to keep small businesses going? I mean, we've touched on that in a number of areas, but can you just...
Yeah, so look, again, for the first quarter, our lending to business was twice the rate of growth to the rest of the market. So I think it's about $7 billion of lending during the quarter, increased our overall exposure by almost $2 billion. We've supported a lot of customers through COVID, not from just the repayment deferrals, but also what's known as the SME loan guarantee that was put in place by the government.
Which briefly means the government underwrites or
it's a 50% risk share between us and the government. I think we took about $850 million of applications. That was more than 50% of applications in Australia. And there's a particular structure and term associated with that. There's a new product which is known as the SME Loan Guarantee 2, which is available with reduced rates. So we recognise the absolute focus on small businesses. They are going to be the backbone of Australia's recovery. They're also just absolutely critical in terms of both job retention and job creation. So it's a huge priority for us.
Lisa asks, as a small business owner, I'm thankful that the Commonwealth Bank waived the merchant fees on our EFTPOS system for 4 months, which has now expired. Unfortunately, due to COVID, people are encouraged to not use cash, so this has created a big burden on small businesses who exceed their monthly usage on their EFTPOS plans. I have had to increase my monthly plan to try and reduce the amount that I have to pay. More than happy to pay the monthly fee, but not the extra once the monthly limit has exceeded.
No, it's a really interesting and important question, and as was mentioned, we did waive fees, and a significant number of those during COVID, as you'd expect, because obviously customers were really hit hard in many of the industries that are taking electronic payments. And we believe that cash has reduced quite substantially, and electronic payments are really important. Maybe without going into too much detail, we're certainly looking at our pricing in a few different areas and making sure that we've got the most convenient structure, because I do think the way people pay is going to continue to change. And so we're certainly looking at both our offering in merchants, absolutely critical from our perspective that we've got a very good point of sale experience or merchant experience for our customers that's competitively priced and priced in a way that makes sense to them.
Well, another small business owner, Yale, is really asking, for a small business, we cannot negotiate any better deal on our merchant terminal, as she says, large businesses can.
Oh, look, I mean, it's certainly true that the largest businesses in Australia, if you think some of the big retailers, as you'd expect, just given their size, they would have a slightly different pricing structure. But as I said, it'd be premature for me to go into it in too much detail. I think competitive, transparent pricing, which is suitable and effective for all of our business customers, which I think both represents the way people are paying today, but also the way we believe that people will continue to pay into the future, which is, of course, I think going to increasingly rely on electronic payments.
Yeah. This is about account fees. Stephen asks, why doesn't CBA reduce fees on all savings accounts during the pandemic? Everyone is suffering financially, and interest rates are at all-time low, which we discussed earlier, with the expectation of going lower, perhaps.
Well, there's no fees on savings accounts. There are some monthly account keeping fees, but I mean, the vast majority of customers don't pay those. The other thing that we've really worked on in the last few years, because perhaps there's a reference to something like an overdrawn account fee, which one of the things that we introduced about 2 years ago was alerting, so that customers effectively, we notify them when they're overdrawn in the banking app. We give them till the rest of the day to make sure that their account is no longer overdrawn, and if that's the case, the fee isn't charged. That's seen the amount of fees that we're charging broadly halve. So there's been a really significant reduction, and part of what we've done the same with our credit cards as well, just giving people notice about when it's due, reminding them that it's due, and giving every customer the best possible opportunity to avoid some of those fees, because I understand that they're frustrating. They're accompanied with cost to a financial institution as well when customers overdraw or don't make repayments. But part of just being more transparent and really alerting customers gives them the best opportunity to try and avoid those fees.
Matt, a lot of customers want to ask you about customer service. You're a very big organisation, we know that, but people do get frustrated with all sorts of big organisations when they call a call centre or want to get attention on the phone. Russell asks, the wait time for calls to be attended is completely unacceptable. Why does CBA not value the time that their customers must commit to if needing assistance, and could not this situation be relieved by redirecting resources from executive salaries to additional frontline staff?
Well, we certainly do value our customers' time. And look, I'd say overall, we've been really fortunate during, particularly the pandemic. We have all of our contact centres onshore. And so we've had more than 2,000 people that have been from Brisbane right the way through to, we've got 2 contact centres in Tasmania. And we've added about 1,000 people, more than 1,000 people into our contact centres. I mean, we've been requesting or responding to enormous numbers of requests for assistance, which of course doesn't make it any better for the person who is having to wait for the call to get through. I think from my perspective, by and large, I'm extremely proud of the work that our teams have done and put in. We certainly do expect that wait times will continue to reduce going forward. It has been a very significant operational period, which, notwithstanding that question, I think the teams have done an amazing job, and we've had people from our branches working in contact centres. We even hired some people from the airlines and trained them and put them into our contact centres. So we've certainly added a lot of resource, but it is also a function of, we're dealing with millions of requests for assistance.
Yeah, so do you see it internally in your information that, oh, this is still a really big problem for us? Or do you think perhaps Russell's experience was more a one-off?
I mean, somewhere in between. Look, there's times of the day, so I see, and as you'd expect, we track how long people are waiting, the average speed of answer, and over the course of a day. So there's certain peak times, so it depends when that was. And like if I went back to April and May, there was a very significant proportion of customers and people weren't going into branches, people obviously weren't venturing out, so there was a huge inbound call. So it depends a little bit on when Russell was calling, but we're certainly acutely conscious, aware and focused on making sure that we're delivering a very good customer service. And like I said, I'm fortunate to have thousands of people who've been based onshore, and I think have done a great job trying to help customers. But I do apologise to Russell for what sounds like a frustrating experience.
A couple of questions and then we might have to finish up on really culture, I suppose, but this one is from Lucas. With high executive wages, rewards and incentives, how do you see newcomers like me, brackets, I'm a student pilot, putting trust in your bank and your lending strategies? Why should I consider continuing with your business when you rely on ours, the public?
Look, and trust is a really important concept in any business, but certainly in banking. And I think we've been saying consistently for some time, we expect to earn that trust. We value it very highly. We also recognise that you can lose it quickly. And we've been very focused on making sure that we're demonstrating that through actions. A number of the things that we've been talking about tonight, but also just trying to engage very directly and transparently with customers. These sorts of forums, as you said, albeit virtual, are really important as part of that, to hear directly from customers and to be able to respond to those directly.
This is from Grant. Dear Matt, thanks for the lovely email and invite to tonight. You oversaw and apologised for two of the biggest scandals involving the CBA in recent years, enabling money laundering by serious criminal syndicates and the insurance fiasco. Yet somehow you got promoted. Two questions. How can we trust a bank who promotes people who fail to prevent criminal activity by the bank, allowing it to go through by the bank, especially when the misconduct profited the bank? The second part of that, has or was your remuneration reduced as a result of your failure in oversight?
Yeah, so maybe let me deal. I'm not exactly sure about what the reference to insurance is, but putting that aside, I mean, look, we've been very transparent, particularly going back to sort of 2017, 2018 about AML. And yes, me and others had remuneration reduced substantially in both 17 and 18.
By how much?
To zero. So what we could consider our variable reward, many people would refer to as a bonus. And there were serious shortcomings in the way the Commonwealth Bank managed our AML, anti-money laundering risks, and we paid both a penalty for that, and the corporate did. Executives certainly paid a penalty, as they should have. And just to correct one element of the question, there's absolutely no suggestion from any party that the bank profited from it whatsoever. But that doesn't make, even if they're inadvertent breach, it doesn't matter. I
think they possibly meant more that, it was good business for the bank, not that somebody individually profited.
But it wasn't good business for the bank. The bank didn't profit from failing to notify the regulator about mandatory reporting obligations. So look, it's a misconception, but the reality was it doesn't make it any different or better. We've invested an enormous amount into improving our AML controls, which has been recognised by a number of people, including the regulator. I mean, to give you an idea, we've added in the order of 1,500 people into our AML areas. We spend, as one of the single largest areas of investment that we make as a financial institution. We're absolutely focused on making sure that we don't breach those very important laws ever again.
Matt, just sort of finally, the Hayne Royal Commission, gave you a belting. to put it in the vernacular. There were a lot of recommendations. You have put in place a lot of reparation work. Just can you tell us briefly, a number of customers were interested in, how are you transforming? What are the measurements, the KPIs to actually measure whether you are transforming, and where is that up to at the moment?
Yeah, look, Helen, there's a lot of different ways I think I could answer that question. Maybe I'll just pick out a couple of areas. One in particular was a program of work that we put in place in response actually to the Prudential inquiry, but a lot of the themes that were examined by APRA were quite similar, or at least consistent with the Hayne Royal Commission. There were a number of recommendations that we're responding to. We report on our progress, so we've completed about 3/4 of the milestones as part of those recommendations. There's an external and independent party called Promontory, which both oversee and then report on our progress. We release those reports each time we report our financial numbers, so on the half and on the full year. So again, we're trying to be very transparent about the progress that we're making, and we're being held, as we should, to a high standard by an external party, and we're going to continue to do that. So notwithstanding the fact that we're making, we believe, good progress, we recognise and we want to make more progress, and are absolutely determined to do so.
I think we have run out of time. We've gone over time that we allotted, and we do thank you. Before I let you go, do you have some final comments you might like to tell customers?
Well, I mean, only to echo what I said earlier, Helen, and thanks very much. I feel like you've navigated certainly through a number of those questions, but just to thank everyone for taking the time to write in. Certainly really important and valuable to me, to my leadership team, to get that direct feedback and see, and based on the thrust of your questions, where some of the key themes are. And again, just to thank all of our customers, A, for banking with us, and B, for the ability to support so many of you during the course of the year, and we really appreciate that. We don't take that for granted, and we look forward to, as I'm sure everyone in Australia does, better times ahead, hopefully next calendar year. But thank you so much for the opportunity to talk to you this evening.
Thank you, Matt Comyn. It's been great that you answer very openly as many questions as we could get through from your customers. And thanks to all of you who sent through questions for Matt. Now, a replay of this forum will be available online. You can access it at CommBank, it's the double M, commbank.com.au/CEO, and that'll be on later tomorrow. A special thank you to everyone for watching the forum. We really appreciate your time. We appreciate your feedback and your questions. You might receive a feedback survey in the next few days. But from me, Helen Dalley, thank you and good night.